I view my time horizon as 47 years, right? So I want to be financially secure until I'm 100.
Steve Brice is the Global Chief Investment Officer for Standard Chartered Bank.
How I certainly manage my own money.
It was a very exciting time with the tariffs. What do you advise them to do in times like this?
As an investor, you've got two choices, right? The first one is,
If I buy now, there's a possibility it's going to go down further, and we're all averse to loss.
if markets are already down 30%, I would say the probability is much higher than 2 out of 3 that next year you'll do.
How do you stay calm?
Literally, breathe is one of them. I always have cash on the sidelines. So I'm able then to say markets have gone on sale.
I also worked with you one-on-one. We did some coaching sessions.
You did teach me stuff that I didn't want to hear sometimes, of course, but has really helped me. So one of the things you told me.
What was that one moment or one event in your life that brought you the most success?
Marrying my wife. She really is my balancing item.
What would you want to say to her right now? What are you worried or afraid that people might find out about you?
It's a strange one.
Hi, Steve.
Hi.
Can you share with us what your superpower is in one sentence?
I generally care about people. I want to help people. But the counterpoint of that sometimes is that I don't look after myself as much as I should do because I'm too busy worrying about other people.
I'm going to remark that sounds very much like a financial guy who hedges both sides all the time by training.
Yeah, I guess. But I think everything's about balance, right?
Yes.
So, no matter what we're talking about, whatever we do, extremes are generally not good. So I can take that to, if you're an extremely successful athlete, you have probably dedicated every ounce of your being to being that athlete, which then leaves gaps elsewhere. So yes, we all see the Usain Bolt running world records all the time. We don't see the rest, and I'm sure he would, if he was being transparent and open enough, then he would say, well, yeah, but what I've sacrificed and what I don't have in my life has been basically to achieve those goals.
So you mentioned that the other part of it is that you don't take care of yourself as much. Would you say you're a people pleaser?
Yes, I would. Right, I guess the easy answer. I'm very sensitive to feedback and whether it be direct feedback or just people, saying things. You're like, okay, in the moment it might sound fine, but then afterwards you're like, oh, maybe that's an indicator that there's something we need to do differently. Now, obviously that can help develop, so we can develop new products, new way of engaging with clients or whatever. So there's a positive element as well. But yeah, it does mean that sometimes I can be a little bit paranoid, I guess.
Now, Steve, you've been working with Standard Chartered Bank for over 27 years.
Yes, indeed.
That's rare now to find someone who's been working in one place for so long. But I've been working media for almost over 30 years. You work in an industry that is known for restructuring and retrenching. And people are, losing their jobs all the time, and yet you stayed so long. So how do you maintain your value to the company for all these years that you're always a useful asset for them?
I guess it comes from what we discussed earlier, right? So when you're trying to improve, you're trying to please, you identify what the gaps are in terms of what people need. So the example was when I first joined Standard Chartered Bank in 1997, I realized that nobody was providing the dealing room or senior managers with information about what happened overnight and views about what's going to happen going forward. They did it verbally through the morning meeting, but there was no source of truth, if you like, and I use those words loosely. That group that started with 3 people, right? So I literally sent that email to 3 people for the first week, and then it was being sent globally within a couple of months. That sort of, what else can I do to help support the business has really, really kept me going within the organization.
That's a really good lesson, and I'm hearing two things from that. One is when you just said, what else can I do to support the organization? When a lot of people go in, what can an organization do for me? So that's a very different mindset going in. And any boss would want people who come in and say, what can I do for you? The other lesson I got, which is related to social media, they always say, just start. And people are so afraid to get started doing videos or YouTube because they think, oh, no one's going to watch it. But everyone starts and you get 3 people watching, your mom, your grandma, and yourself, right? Which is normal. And you started with 3 people and look, now it went global. So that's the 2 big lessons I got from that. Being in the finance industry, recently, of course, it was a very exciting time with the tariffs.
A bit too exciting.
A bit too exciting. So how would you advise your clients with large portfolios and who are panicking because it's their hard-earned money? What do you advise them to do in times like this?
So the first thing is breathe.
Yes.
Right. So these things happen. So actually what we've seen in markets this year may feel very abnormal, but the max drawdown, so peak to trough in global equities, is actually the median outcome over the past 27 years. So it's felt worse than it actually is. And that's partly because of I think there's a lot of emotion going into what's happening in terms of policy. So you're either really pro what's going on in the US or you're really anti. There's very few people in the middle ground. So that is really testing people. The second thing is I think as an investor, you've got 2 choices, right? The first one is you trade intraday. You get your Truth Social account open and you track what's being said and you trade on that, right? And so you're very, very short term in nature. The alternative is you step back and say, okay, this too shall pass. What is my investment plan? What are my objectives? What is my time horizon? My time horizon isn't 24 hours. For me, I view my time horizon as 47 years, right? So I want to be financially secure until I'm 100. So you can figure out how old I am, right? So that's how I certainly manage my own money. And it's certainly the advice that we would give to our clients is don't get too caught up in the here and now. Obviously you can make modest changes at the fringes, but it shouldn't be throw the baby out with the bathwater.
And I hear that a lot, right? Always have a long-term view, but it's hard to stay calm when you see your portfolio all in the red, and that's where people get emotional. So I'm hearing you say that to be smart when it comes to your money, have that long-term view, meaning what's that timeline to start with that?
Yeah.
And then what are the next things after I decide? Let's say I decide my timeline is I don't want to wait till I'm 100 to enjoy the returns. Let's say I want to start getting returns in 20 years' time.
To be honest, it's the same. So as long as you're beyond 10 years, it doesn't really matter whether it's 10 years or 50 years. The general approach is the same. So obviously you need to be diversified. That's how you smooth things out. Because if you don't smooth things out, then you're opening yourself to volatility that you will have a very big emotional attachment to, right? We know that people attach a much higher weight in their psychology to losses than they do gains. So the amount of negativity that we saw on April 9th, which was the low in global stocks, was extremely intense. And we actually talked about this in our publication saying, this looks like peak pessimism. And we put in our following weekly on the 11th, we indicated that people should buy into equities now because everybody was so pessimistic.
It's a sale.
Yes, exactly. Things have gone on sale. If we went to Tang's and things were on sale, we're like, oh, wow, this is interesting. Obviously, you should only buy stuff you want to buy on sale. A lot of people buy stuff that they actually don't want on sale. So you should buy, within the bigger context of things. But yeah, that's exactly what happened. Things went on sale. It was a great opportunity. We say buy low, sell high. Our emotions are screaming sell low, buy high. That's what our emotions are telling us. And you need to acknowledge that in yourself. Until you make that link, and very few people do, then it's you're going to underperform. If you manage to buy things on sale and hold through, you'll outperform 95, 99% of investors just with staying power.
How do you stay calm?
There are different strategies you can use. So, I mean, literally breathe is one of them.
Yeah.
This too shall pass. But there's also other strategies that you can employ. So one of mine is I always have cash on the sidelines. So I'm able then to say markets have gone on sale. So, the biggest challenge for us is advising clients that are 100% invested before the market peaks and then it goes down and say, yeah, hold is not very compelling. You're good, you'll be fine, don't worry. Whereas if you've got something to do, I think people like something to do in that situation. Now, the knee jerk is to sell or reduce risk. So the number of people who are, I've heard, I don't know how many times, going to cash, short duration bonds. So yeah, it's just trying to find different strategies to basically trick your brain into saying, I'm in control, everything's good, things have gone on sale. So that's what we did. So my wife and I invest every month. In beginning of April, we invested twice what we normally invest.
Wow.
And it wasn't because we thought the markets had bottomed. To be upfront, right? It was just think they've gone on sale. They may well go on more sale, and then we'll continue to buy two times what we normally do. This month they've rebounded back, so we did what we normally do on a month.
That's the benefit of having a global CIO in your household.
She chose what we invested in, by the way. It was European equities, which was interesting.
Well done. This tariff issue is still going on. What under-discussed effects of this tariffs would concern you most?
Yeah, I guess it's the uncertainty that the policy environment we have now. I think if businesses knew that, let's say we're around 15-17% average tariff rate in the US. If businesses knew that was the end outcome, they would adjust. It would not be nice. It wouldn't be pleasant. A lot of assets would be wasted in terms of historical capital investment, etc. But then people that go, okay, fine, we're gonna deal with this environment. It is what it is. We'll move on and adjust accordingly. But that's not the world that we live in. We don't know where tariffs will end up. And that's the challenge. So businesses are delaying hiring because when you're faced with uncertainty, you generally sit on your hands. That's what individual investors are doing, but it's also what businesses do. And you can understand why, because anything, they hire somebody today, they might not need them tomorrow. Confidence data is very weak. That can be fickle. But it can also lead to worse economic data in the future. We're almost certainly going to see a slowdown in global economic activity. The fear is that the uncertainty leads to a recession. The good news is, even if it was a recession, obviously that would be bad for equities, no doubt. But we don't think there's enough leverage in the financial sector in terms of corporates or in terms of consumers to lead to a nasty recession. We think it's man-made, and two, because of that, it will be relatively short-lived. So if we do see that, it'd be a great buying opportunity. I still have cash on the sideline, so I'm actually that would almost be nice for me personally. It would make my job a lot harder.
Okay, I like that you said, and I will keep that in mind, have some cash on the side ready to go in for the sale. I understand how a lot of people feel, because when markets go up and you think, wow, everything's doing well, this is a good time to buy because I feel there's some sort of guarantee or certainty that we're all doing well. But when they go down, if I buy now, there's a possibility it's going to go down further, and we're all averse to loss. So it's that immediate loss we're thinking about, not the future gains. So that's hard to sort of overcome when like for someone like me, I'm not so familiar with the ins and outs. And that's why it's great to have a global CIO in your household. But
yeah, maybe one thing to think about is so equity markets on average, right? They go up two-thirds of the years, right? 2 out of 3 years, and down 1 out of 3 on average. Looking forward, if markets have already down 30%, do you think that probability on a forward-looking basis is higher than 2 out of 3, or lower than 2 out of 3? I would say the probability is much higher than 2 out of 3 that next year you'll do well, because you're already down 30%. You've already gone on sale. It's not impossible, of course. You do have down years, consecutive down years. They actually are pretty rare. So if you did a conditional probability, obviously I haven't got the numbers in front of me, I would reckon we'd be 80 to 90% probability of after a down year being up the next year. And that's obviously the great exception to that would be the Great Depression.
It's clearer to me that next time the markets go down, I'm going in to buy.
A lot of people think it's binary. It totally isn't. If you got, let's say you have $1,000 on the sidelines, you don't have to do $1,000 in one go. You could say, okay, fine. And this is the other trick is say, what is my asset allocation I want in 1, 2 or 3 years time? Pick your time horizon that you're comfortable with. Okay, so you say, okay, I want to be, let's say I'm in 20% in equities, but in 3 years time, I want to be at 60% equities. Okay, so what's the average buying I need to do over the next 3 years? Let's just do that every month. And then if market goes on sale, I accelerate because I'm going on sale, but I have this North Star, if you like, in mind. I think that can help you stick with the plan, which is really key. Now, I can tell you that's suboptimal. If you want 60% in equities, you should put 60% today. That's the theoretical right answer. But I think the practical answer is take your time, get comfortable with where you're going, but just keep doing it.
We all think that making money should be something, some people like it quick and easy. And even people think I need to invest, but when you're not sure what to invest, you just follow what your cousin or your dad or your somebody's friend is doing. But what you've laid it out is actually, it's a discipline almost. If you want to invest, you have to, they always say be very educated, but not all of us have the time or the resources. But it just sounds like a simple system that anyone can do.
The analogies with losing weight is very similar. It's discipline, right? Now, I know there's and actually you can take the analogy even further and say there's lots of different ways people tell you to lose weight. Right? So you can say, you should eat low fat, you should eat high fat, you should eat low carb, no carb. No, you should love carbs in moderate. There's so much advice out there, and it is really difficult to filter through all that. And the reality is you have to find what works for you. But I promise you it takes discipline. So I'm never quite the shape that I want to be, right? I always would like to be just a little bit thinner, and etc. I like to exercise. Unfortunately, what you put in your body is far more important than exercise. So that's where I have to have greater discipline. And yeah, I'm more disciplined as an investor than I am as an eater, maybe. But yeah, that's what I'd say. So that in the financial world, people say, I can tell you how to pick stocks with 100%. If they could, they wouldn't be on YouTube. Just try and figure out, why is this person doing what they're doing? And they're doing it probably because they get a kick out of it, but they also get financial compensation through the adverts that go through on YouTube and these sort of things. So try to understand the motivations behind the person and say, okay, but if what they're telling me is true, does it make sense that they're doing what they're doing? And if sometimes that's the case, some people are just altruistic, trying to do the right thing. And not worried about making money from it. But the more sensational the headline, we know the more clicks. It's what I certainly fight against all the time because we try not to be sensationalistic. It's a challenge.
Yeah. So my takeaway is that it is a discipline. Have a system that works for you and stick to it. And I think have that long-term view. Be patient.
Yeah.
Don't be in a hurry. But back to your eating analogy, I work out just so I can eat.
Yeah. No, I mean, I hope my mum is not watching this, but my mum is 82. She goes to the gym 5 times a week for exactly that. At least 5 times, 5 to 7 times a week, just for that reason. So that she's very careful about what she eats now. I mean, her metabolic rate's going down, of course, despite everything she does. But yeah, her primary reason is I do that so that she can have a glass of wine if she wants, or she can, occasional nice lunch with her sisters.
Yeah, she'll be my role model because I want to still keep working out when I'm 82 because I want to eat whatever I want to eat.
It's an inspiration. It's a real inspiration. Yeah.
We talked about this before, this 80-20 rule. And I mean, it's something I've heard for so long that you focus on that 20% that gives you 80% of your returns. And I'm trying to apply in different things. For example, my business. So it's a little hard because there's so many things I want to do in my business. I'm so excited. Everything's important, but it's not. It's only that top 20%. And you did that which was a risky thing.
So we had a business where it was 80-20. So it was our discretionary portfolio management business. We still have, it's not 80-20 anymore, but we still have both businesses. And I was passionate about the 20%. So I was given the responsibility for running discretionary portfolio management. Pretty much the first thing I did was I gave the 80% away, which you can imagine the person who I had running discretionary portfolio management was a little bit peeved at me, to be honest. Yeah, he's like, you're going to do what? But my view was that 20% was where we as a team could really add value, and we could grow it very significantly. And we've done that now. So, I mean, this was in 2022. So I'm just trying to get the right math. So we're 9 times in terms of assets under management today than what we had left over after we gave the 80% away. And it's grown extremely fast. And it's really, if you say, what makes you proud? That's pretty impressive. And the journey's not done. I mean, we have aspirations to make it 3x from where we are today. So what's that? Nearly 30x from where we took it over. So I think it's really quite powerful what we're doing.
So one of the things I am focusing on now is about vulnerability. And I remember when I was a boss, and it's obviously, it wasn't a department that was soaring or doing well. When it's a department that's in crisis, you got to go and take charge and, make quick decisions and be made of sterner stuff. And I'm that kind of manager. I'll go in, I'll get things done. And they knew that when things fell apart, they could count on me. But in peaceful times, they'll say, boss, you're kind of intimidating. And I'll be like, good. I see that a lot of high achievers, driven people, they sometimes have challenges being vulnerable with their teams because maybe they see it as a sign of weakness or see as, like they can't lead or whatever the perceptions are, which I had. Was there a time you recall being vulnerable in front of your teams?
So I think there's 2 types of vulnerability. There's the bad type of vulnerability when
fragile.
Fragile. When things are going wrong and you need to be the person to go to and you're not, that's obviously, extremely suboptimal. I can remember one situation in particular when I was in South Africa where we're basically a subordinate of mine, not technically a subordinate, but junior to me in the team. He basically said, Steve, you're making matters worse. Go and sit in your office for a while you calm down and we'll take this on. And that was just a welcome wake-up call. I still remember the conversation.
And what's the good kind of vulnerability?
I think it's more showing your human side. I'm very approachable. And part of this is just, I show an interest in people's lives. I talk about my family. I have historically, people have come to my house, right, and seen my kids when they were this high. Now they're both at university. So, and a lot of my team members have been with me for a large part of the journey. So, 12, 13 years is not uncommon in my team. So they've seen me, that side of me, and I think that helps people relate.
So I have a few quotes from your team members.
Oh dear.
And I'm just going to read it out to you. Working with Steve is awesome. He's very inclusive in his management style. He remains calm even amid stormy markets and is a research whiz. Another person says one of Steve's biggest strengths is the autonomy he offers to his team. After setting the framework, he offers his team flexibility to work out the best way to achieve those goals. And Steve's probably the best boss I've worked with. He's very clear on his vision, but doesn't dictate the journey for any of us. It's been very empowering, filled with lots of learning and growth opportunities. This is high praise from your team. I think
Well,
any
they
boss
probably
would want.
kept some of the negative stuff for them to themselves if they knew it was coming on this podcast. But yeah, no, I think
How do you feel after hearing your team give you such high praise? Because any boss would be so. I mean, I'll leave you to fill in the emotion that you're feeling now. What is the emotion you're feeling now?
Pleasure, pride. I don't know. It's look. I have a very high performance, high functioning team. I'd like to take full credit for that, but of course, when you're hiring people, there's a huge element of luck involved as well. For me, I will go to my team and say, okay, this is what I want to achieve. It's called adaptive leadership. The bank was going through this process where we want people to be adaptive leaders because it helps other people grow, because it gives them a net rather than the fish, maybe is the analogy, and helps them then grow into my role at some point or another senior role within the organization. And I've always wanted people to have that opportunity to grow. Sometimes I wish they'd seize it a bit more. So, some people I think have been. So my former boss was a very different leader to me. He would acknowledge it. I was still very good friends. He's now in Abu Dhabi, and he would be very, very strong about what should be done and how. And so when I took his role 4.5 years ago, I think it was a culture shock for the team to be, okay, go and figure out how to deliver this. But yeah.
So that made me think, right? In terms of how I used to manage when obviously, with a lot of people. And I'm a bit lazy, so I don't want to tell people what to do because it's too much, it's too tiring to tell people what to do. But I'm very clear that you have to do the best you can at a certain level. I expect a high standard. And they knew I'm not pausing on the standard. So I think if they themselves want certain standards, they feel motivated. But if some people just are okay with just enough, then they feel stressed. So I realize now, looking back, all the A-listers and the top performers, I'm still very good friends with them till today. The rest, not so much, because they probably thought, oh, she's such a bitch. And I think that's fine because, everyone has different styles of what they prefer from a boss and what they prefer from their direct reports.
I think there's something that I was just thinking about when you were talking. Historically, I have been too soft in some environments. And what I've learned over time is that actually being hard can be kind, whereas being soft is not kind. And I was thought by being soft, I was being kind, but actually you don't encourage or force growth on people. And so I've had to, because of my psychology, I had to persuade myself first that being tough is kind to the person that you're being tough to. Because otherwise you can get to a situation where, hey, this is really not working and it's too late to fix. So if you correct along the way, then I think it's actually better for everybody.
Do you think you are successful?
Yeah, if you to say, Steve, you're CIO of Standard Chartered Bank, a FTSE 100 company. I mean, FTSE 100 is not what it used to be, but you go, yeah, that. I'd never have dreamed that when I was a kid. So yes, but then I live in the day-to-day, and I think still a lot of things that I want to do. There's still a lot of things that we could do better. So yeah, I think when you step back, yes, but when you're in the day-to-day, it's not a question I even think about.
What was that one moment or one event in your life that's brought you the most success?
One is coming to Singapore in 1997. I mean, I was 25 years old. I still can't believe Steve, 25 years old, made that decision. Right? It beggars belief. It really does. I was not super confident. It was 50-50 whether I was going to take it or not. So that was obviously life-defining. We never know, of course, coming back to the sliding doors moments. Yes. Who knows what I could have been if I'd stayed in London, so we don't know, but I'm happy with where I am at. The second one, and I know it sounds a bit corny, was marrying my wife. She really is my balancing item. So when I'm up. She, makes sure I don't get too big for my boots. So I don't tend to do that anyway, but she's always very alert for that to make sure I'm down to earth. More importantly, on the other side, when I'm down, and I do get down sometimes, she gives me perspective and brings me up and helps me get through that period. And I don't think she, even though I tell her, she doesn't understand how important that is. But that is, I'd be nowhere without her.
Oh. What would you want to say to her right now?
We always we communicate a lot. Obviously, she's my rock. So I think I don't know whether she believes me when I tell her that, but she knows I think that. It's just that she's my rock.
Can you imagine what life would be if you hadn't met her?
No, we've got two beautiful, handsome, smart boys. Without, I think it's difficult to imagine. I think my immediate feeling is that I'd be lost, but maybe I'd find somebody else and I'd be okay. But I don't think I'd be anywhere near where I am.
Thank you for sharing that.
Okay.
What are you worried or afraid that people might find out about you?
It's a strange one. I get up on stage. I can present to over 1,000 people. Of course, you get a little bit nervous, right? That's natural. But once you get started, there's nothing I like more than actually getting up on stage now. That's not how it was when I started out on this journey 27 years ago. Still remember the first presentation I gave in Hong Kong in January 98, and that was, I was a wreck. I really enjoy that. But then you put me in a room, which I do at the same time, if you think about it, in a room of people I don't know, I'm not comfortable.
You mean networking?
Yeah, so obviously, and the way that, I don't know whether you've ever done Strengths Finder, but they have the Gallup Strengths Finder,
Yes.
and they have this concept of woo versus relator.
Yes.
So I'm a relator, right? So put me in with somebody I know or have built even a slight rapport with, I love it. But I'm bad on woo. You put me in a room of people, I feel like I'm shrinking. Right? I don't want to be there. And then once the conversation starts, or you bump into somebody that you do know, I'm fine. But it's just that point. So I'm really, and if you think about it, when I present, often I'm in a room I know nobody on, and then I have to get on stage. So I have to manage that transition quite well.
How do you manage that?
It depends how you feel on the day. So you feel, you just acknowledge your feelings. And if you say, this is not where I need to be before I go on stage, I extricate myself from that situation. So I know they often have green rooms or whatever beforehand. Very rarely do I use them. But sometimes I'll go, I actually need 5 minutes to myself before I get on stage.
Would you consider yourself an introvert?
My knee jerk is yes, but I think most people would say no because they see me on stage. But yes, I think, I think by default I am, but I've learned a lot of behaviors that means that I don't look like I am.
And that's the thing, right? A lot of people think that if they're introverts, it's harder for them to excel as a leader who needs to be out there, because they think, I'm an introvert, so I'm not good at public speaking. But you've shown that you can be in your soul an introvert, but yet do very well in public speaking situations, media interviews, and even networking.
Yeah.
It's finding that system or that tools that work for you.
And it just comes down to ensuring you get the me time when you need it. And I was really bad at that to start with, but I'm a lot better now. So it's going to sound really strange, one of my favorite times of the week is Saturday morning. I go for a long run/walk, more walk than run these days. And that's, I can be out there for between 2 and 3 hours. And I'm listening to podcasts, listening to music, or just walking around thinking about things and putting my setting my intentions maybe for the weekend or for the week to come, and just reminding myself that these are things I need to achieve. So that's when I get my me time.
Yeah. I'm not an introvert. I am an extrovert. I remember when I was in my 20s, people would say, hey, there's a party this weekend. An introvert will always say, who's going to be there? My first question is, what's the dress code? And that's me. And I'll just show up, and I was always so happy to be out, and I always felt the energy when I'm out. It was much later on that I learned that I'm actually ambivert. Because there are times when I'm out and I'm not the life and soul of the party, and I didn't feel like being the life and soul of the party. So I didn't understand that until I did this test, and I realized, there's such a thing as an ambivert. And I deep dive into what ambivert means. And it means that you're kind of, the spectrum, introvert, extrovert. You're most people are somewhere along the spectrum. I'm squarely in the middle. And COVID actually brought out the introvert part of me more, where now I just want to stay home and watch master classes on YouTube and listen to my ebook. I don't want to go out. But when someone invites me, I'll be like, okay, let's go, because the extrovert part says, okay, let's go. But as I'm getting ready to go out, I'm resenting every moment. As I'm getting dressed, I'm like, it's like I'm dragging myself out of my comfortable home. I'm like, what did I say yes? I'm resenting until I get there, and I'm like, woohoo, I'm so happy to be out. And what? It's over? Where are we going to go next? So I'm really squarely in the middle. Some people think that they're ambiverts because even though they are introverts, they prefer to be home, but I can be outgoing and extroverted with the right crowd.
Yeah.
When you say it's the right crowd, you're still more introvert, because introverts feel comfortable with people they know, people they've established a connection with. Extroverts are happy with anyone.
Yeah.
So that's that. And ambiverts flip both ways. So I kind of flip both ways. What would you say to your 25-year-old self now to do differently, to do more of? What would you advise your 25-year-old self?
Look after yourself more.
What does that mean?
That I would spend too much time worrying about the rest of my team or other people, and I should have spent more time, and I worked really hard at this today, to find time for myself, look after myself physically, and mentally as well. I've recognized that that helps me help other people more if I'm strong in myself.
You have to do a lot of keynotes and media interviews. What does presence mean to you?
Obviously, when you're on stage, presence is being in control. Being in control of what you say, how you say it, what gestures you use. I'm now stopping which of my gestures I'm using. But just trying to make sure that you are aware of what you're projecting. One of the things I hate doing is presenting behind a podium. Mm-hmm. Actually, when you start, you feel safe, but you're creating a barrier between you and the audience. And actually now I feel less safe if I'm behind. I never do it. I refuse to do it. Presence in life, in the office, at home, is 2 ears, 1 mouth. You learn a lot more by listening than by speaking. So it's almost like Jekyll and Hyde, right? On stage, you realize that everybody's learning from you, and that's your job in that environment. But in most of life, it's actually listening to people that's far more important, and not just for you, but also for the other person to feel heard. So that's presence in regular life. Mm.
So Steve, I worked with you in your teams. I did some workshops for you, and I also worked with you one-on-one. We did some coaching sessions. Yes. And it's something, I'm going to share my observations. It's so rare for a C-suite to attend a workshop with their direct reports. Usually the C-suite does their own one-on-one sessions, and the direct reports have their own workshops, one-on-one sessions. But you actually joined everyone in the workshop that we did. And I was very pleasantly surprised. And you were there leading in with a learner's mindset. And even though you had obviously done a lot more speaking, and this was a media presence workshop
Yes,
you were
yeah,
doing.
yeah.
And you've done a lot more of it, but you're still leaning in, learning, and sharing your experience, things that you found as well, which I found very refreshing, because you didn't, even though you had more experience, you didn't come in as I'm the expert over everyone. You came in as I'm learning together with all of you. And I thought that really gave the rest of the team that feeling that we're in this together.
I think there's two reasons for that. One is I know there's things I can learn, right? So and you did teach me stuff that I didn't want to hear sometimes, of course, but has really helped me. So one of the things that you told me, and of course it's now, when you said it, it was so obvious, is, Steve, you should listen to yourself and watch yourself after you've done stuff. And nobody likes listening or watching them, or very few people like listening or watching to themselves. But I've learnt a lot from doing that. So that was it. So the first thing was, yes, I wanted to be there to learn. The second thing was, I wanted the team to have a growth mindset as well. So you get the osmosis of that, of me saying, yeah, I've been doing this for 20 over years, but I still want to get better, and wanted them to take it seriously, because there was, we have a lot of people that go in front of the cameras, and they have very limited training. They have basically the training historically, and it's much less like this now, but historically the training was basically to make sure you don't say something you're not meant to say, rather than how do you come across that was the media training of 20 over years ago. So I wanted people to say, look, it's not just what you say, how you look. And I think, for some people, they think, well, it shouldn't matter how I look. It's form over substance. Yeah, but if you get the wrong form, nobody cares about the substance, because they'll turn channels. And I think that was some of the lessons that I wanted to pass to my team as well.
I worked with you one-on-one during the coaching sessions. It was the same thing. You leaned in, you're attentive. And now I want to ask you, what were some of the takeaways that you learned from me?
So the one was, watch yourself and listen to yourself. Second one was, you should have a script if you're doing a podcast, which we never did, right? Which meant we waffled and took longer than we needed to say. And then the other one was just breathing techniques, and we talked about earlier about getting some time for yourself. So extracting myself from having to talk to a lot of clients before I get on stage, and sometimes that's okay, and sometimes it's like going, no, Steve. And when it's like that, it's like going, find somewhere, get some breaths, so that you're in control. And do that when I'm on TV as well. I have a tendency to speak very fast when I'm on TV, and part of that is you don't want to be interrupted by the next question before you finish what you got to say, right? So there's often a very short gap between one idea and the next, because you don't want them to think you're finished. But part of it can be, you're just a little bit nervous, and you just want to make sure that you're calm, you're coming across clearly, and the form supports the substance.
Yeah. So I enjoyed working with you and coaching you on that. Thank you for that. What I've noticed is that no matter how long we've been doing anything, there's always that space to improve. Like, even for me, I still need to keep improving what I'm doing. Though I've been doing it for 30 years, and this is my passion, there's always different ways you can adjust or tweak to get to a different level, or maybe it's a different outcome or goal that you want. So it's a lifelong journey in learning something like that.
Absolutely is.
Yeah. Let's talk about prominence. And obviously for you in your role, you are very prominent, you are very well known.
Not as well known as you, Georgina.
In your industry, you're more well known than I am. Do you feel that's a hindrance or a help in your life?
I guess it's generally a help, and there's two reasons for that. One is, you're right, in my sphere, I built a rapport with clients. So I will present every quarter to a room full of our Singapore clients. So they feel they have a relationship with me. I would like to feel I have a relationship with them, but I have a relationship with them in aggregate. With that obviously comes great responsibility, But it does give us the opportunity to say, look, if Steve, presumably they come to the room not just for the free food, they come because they also value the insights we give them, and say, look, if Steve says this is going to happen, or this product is a good product, etc., then that gives some sort of credibility to that, so it can help us achieve our objectives. Also, it's not like I'm Brad Pitt or George Clooney that I walk down Orchard Road and people are swooning over me, right? So I still have privacy. In my world, yes, people know who I am. Outside, I'm pretty much still just an average person. So that means it's probably a great balance for me.
Yes, excellent. It's what my mentor calls being a micro celebrity. So you're famous in your industry, and that's where you need it. You need people to know who you are and doors open for you. But outside of that, people generally don't know who you are. So you get all that privacy and anonymity that you want. So being a micro celebrity is very ideal now.
Yeah.
What is your life's purpose?
So I'm getting to the stage of my career where I'm starting to think about what happens, because I'm never going to retire. I don't want to retire. I maybe don't want to be working 60-hour weeks forever, but I don't see myself doing nothing either. So what I'm passionate about is trying to help those who know they have to take better care of their finances, but don't know what they need to do. So people who don't have any financial background, don't probably have an interest in finance, and just trying to help them, start on that journey and have a programmatic way of saying, okay, first of all, make sure your debt's under control, then save some money, then make sure key aspects are insured, and then start investing. That sort of journey, and just trying to break it down into simple steps, and do it in a time frame that they don't get bored or lose attention, so they can get the discipline to do it. I think that's really what I want to try and help people do. Lots of people are in this space, and I think it's very difficult to land because it actually is complex. So theory is simple, but once you go to okay, I want to invest in US equities, so should I buy a stock? And I think for most people the answer is no, you shouldn't buy a stock. But they say, okay, fine, I buy an ETF. Which ETF? Or I buy a fund. Which fund? And then you it just mushrooms. And part of what I'm doing now, I did it with my sons. So I took them through the processes, and the older one just went 100% US equities straight out the bat with limited thought. The other one had a much more rounded approach. But taking them through that journey helped me think, okay, this is somebody I've got time to spend with. How do I simplify it even further for people I get limited time with to try and make that journey achievable?
What project are you excited about now?
At the moment, what we're doing is we're building a lot of financial education materials. We do a financial education podcast. We have something called Invest Tips and Invest Tips from the CIO's desk. So different podcasts and publications that we put out there to sort of try and support, different levels of education. So people who are, they know they need to insure and they know roughly what insurance, but let's go a little bit more detailed in that, and so that you can say, okay, fine, now I've got a better range of options that I can choose from, rather than just a single life policy or whatever it is. So that's what we're doing now, and then we're rolling stuff out more to schools and universities. So I presented at a school last week, and they were saying, oh yeah, we want to do more in the financial education space. It's really on the curriculum, we're meant to do this, but it's struggling. It's competing with so many different things. And often the teachers aren't necessarily educated in finance, so they're not in the right place to be giving that advice. So I think that's something that we want to roll out. In universities, whenever you do a presentation at universities, all but one time, it's been packed with finance and MBA students, whereas actually I want to talk to the chemistry students or the art students because they're not interested in finance, and I want to help get them on the journey. I don't want to give an unfair advantage to other people as well.
I've always felt two of the most important things that we should start teaching in schools from a young age. The first one is, of course, communications, because that's for life. Communication skills, just communication. How do you communicate
particularly today.
Yeah.
Actually, it's becoming more important rather than less important.
Face to face. How do you ask for what you want? How do you negotiate? How do you express, when something's not right? Communication skills, and how do you share your ideas? So that's one thing which we're never taught in schools, but I think it's so important. The other thing I think is, finance, money management. How do you grow the money you have? How do you handle your money? And I think these are so important to be taught at a young age.
I think it just comes down to the lack of focus, lack of time, lack of skill set. And it's something that we're starting to have those conversations. I think it's complicated, exactly how you do it, because in an ideal world, it would actually literally be part of the syllabus.
Yes.
Right. So you have an exam at the end.
Yes.
So it's not... so you don't just turn up and listen if you want and don't listen if you don't want. I don't think the world's ready for that at this stage. But I think at least if we start getting people that want to listen to have that opportunity, I think the world will be a better place.
So for someone who wants to make finance their career, what are 3 things they should start doing now?
Well, I think the first thing you say, are you sure? I mean, obviously it's been a good career for me, but it's an interesting way. I think the first thing I'd say is you shouldn't do it for the money. I think there's you should do it because you're really fascinated with finance. Now that's a bit strange for me to say because I took my first job in finance. I was interested in financial markets, but I was going to do a PhD. And then I got a job offer and I went, okay, looked at the different compensation and then went, okay, I'm not going to do a PhD anymore. But I think it is important to make sure that you're doing it for the right reasons. I think the main thing now is to say, yes, of course you need the finance skills. That's a prerequisite, but it's not sufficient. So, and the obvious reason for that is Gen AI. So everything that we're looking at now, the question of whether actually you need somebody in my role, it's a question. I think the answer is still going to be yes for the foreseeable future and maybe forever. Forever's a long time, but there's a lot of jobs that could be hollowed out by AI, and that's obviously not finance specific. But if there's a task that is repeatable and can be solved by large language models, initially with a human overlay, just to make sure it's not seeing stuff that isn't there and making stuff up. But ultimately, when you solve that, maybe there doesn't need to be a human in the process. So just be aware that that's the way the industry looks like it's going, as I'm sure many industries. My son's one's training to be a lawyer, the other wants to go on to a medicine degree after his undergrad. Those areas will be affected by this as well, of course. So make sure that you future-proof yourself with skill sets that still survive that, whether in the financial industry or elsewhere, if those jobs don't become available.
I've known you for a few years, but after speaking to you today, I am sensing someone who is kind, concerned about people, genuinely, very supportive, no airs. You don't put yourself on a pedestal, and you just want to show by actions, encourage people by your actions, and lead by your actions. I can see why your team looks up to you so much. And even speaking to you, I can feel that energy of wanting to support and help people be better, do better, succeed better. So thank you very much for sharing your insights and the lessons you've learned.
Thank you so much. It's been a real pleasure. Thank you again. Oh no. You're not going to ask me to draw, I hope.
I am going to ask you.
You're going to really show my skills, my artistic skills up.
I am going to ask you to draw. Can you map out your life trajectory?
Okay. So this is school. Average student, to say the least. Joining Stanchart would be about here. So moved to Dubai about here. Had some challenges, more my psyche rather than anything. So I learned a lot about myself in terms of how I can react to certain things. South Africa did very well, but wasn't really my thing. So we grew the business very strongly. So just after the global financial crisis, and you're like going, okay, I need to find a job pretty quickly. I was very fortunate to have 3 opportunities on the table pretty quickly. And then, join this. So this would be the CIO office, joining the CIO office.
It's a low point?
That's the start of the up point. Who knows? I'm sure there'll be ups and downs on the way, but I have a pretty good feeling that this is going to continue going well in the big picture.
Okay. Yay.